Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, KG, let's talk big picture first before we get into some of these earnings like Tesla or IBM. We were talking to Cameron from New Edge Wealth yesterday, and she talked about, still there's largely this melt-up phase. Do you see that continuing, and is this just a bump in the road in terms of the backpedaling that we saw yesterday?
Yeah, I think we're seeing a little bit of a consolidation taking place, a little bit of a rotation. If you look at the sectors that did perform yesterday, they were defensive in nature. Now we are seeing actually the 10-year yield kind of re-rate a little bit higher here. Let's see how the equity market actually fares with that. We do know the 10-year broke below that 4% level, but if we start seeing it edge to the upside, is that really signifying risk on in the market, meaning those that are selling their treasuries getting into the equity market, or are we going to see a little bit more pressure on the equity market because of those higher yields? I think that's going to be a good question. And I think we are seeing a little bit of a consolidation. We had a nice ramp to the upside here after this pullback we saw over the last week and a half or so. And now we hit an area of resistance around that 6750-ish area. And now we're just trying to consolidate. And I think the earnings front is really going to be that catalyst for us to be able to move forward here and get a new theme in this market. I think there's also a little bit of a concern as we get closer and closer to November 1st. How serious is President Trump into trying to levy those tariff increases on China? And if that's going to be the case, that probably will spook the market a little bit. You are seeing volatility re-rate a little bit higher here, but usually you'd like to see a decent little flush before setting up for that holiday run where we have very low volume. It doesn't take much to move prices higher, and you have hedge funds, money managers as well, trying to chase returns in order to try to either exceed or even try to meet the broader indexes that they're benchmarked to.
Okay, let's talk about the latest results from Tesla. So mixed report here, miss on earnings, better than expected on revenue. And then, of course, on the earnings call, Elon Musk spent a lot of time on the future of the company, which is typical on earnings calls with him. What's some of your takeaways here?
Well, we did not see any type of really breaking news when it came to Tesla in the earnings call, as well as the numbers that were reported. Obviously, we did see the company exceed the street's expectations when you're looking at revenue. That actually came in at $28.1 billion, up around 12% year over year. There's a carry forward there, or maybe a push in demand because of the expiration of those tax credits, the EV tax credits. But we did see the adjusted earnings per share miss, coming in at 50 cents. Street was looking for 54 cents here. Net income, if you're looking at it, down around 37% on a year-over-year basis. We saw automotive revenue actually increase by 6% on a year-over-year basis, but obviously a lot of that's being driven by these regulatory credits that are going to be going away here soon. And the energy generation and storage revenue, that actually came in at $3.42 billion, up 44% on a year-over-year basis. It's around 25% of revenue now, so we're starting to see that incrementally have an impact on the company's top line here. But once again, there has been cost pressures when it comes to AI and R&D development. So that's also taking in a little bit of their free cash flow here. We have seen an increase when it comes to demand in China or competition in China, and they are trying to position themselves in a pricing standpoint way to be able to capture maybe some of that demand or be a little bit more competitive here. So not surprising, you are hearing on the conference call comments around robotaxi and humanoid robots. Obviously, that is the future, and I think the market, for the most part, is okay for right now that the company is obviously, let's say, holding up when it comes to EV sales, and in hopes for robotaxi to expand here at the latter half of this year and or at the beginning of next year, and then you start seeing humanoid robots really take into effect over the next 2 years, 3 years or so.
Okay, that's an interesting point, and especially because we are seeing some analysts raise their price targets on Tesla following the results yesterday. And Alex Coffey had made this point that, sometimes with Tesla, it can be volatile for a period of time, especially right after earnings, and sell off no matter what happens. So we'll see where things go from here. Let's talk IBM. What's some of your takeaways from its latest results? I mean, overall better than expected, even guidance, but it looks like the street doesn't like it.
Yeah, we're seeing a buy the rumor, sell the news type of an event. When you're kind of looking at the numbers, they actually look pretty decent outside of the Red Hat enterprise portion, where we are seeing some deceleration there. The adjusted earnings per share actually beat the street's expectations, coming in at $2.65. Street was looking for around $2.45, and revenue did once again beat the street's expectations, coming in at $16.33 billion. Street was looking for around $16 billion even here. You're seeing around a 9% growth on the revenue front on a year-over-year basis, and they are seeing demand when it comes to artificial artificial intelligence, not only in-house, what they're actually leveraging in-house in order to reduce expenses, but also the demand when it comes to the product offerings that they have for the street as well. Their AI book of business actually did grow to $9.5 billion. That's up from $7.5 billion in Q2, and they continue to focus on productivity and automation products and services as well. So overall, I think this is a decent report, maybe a little bit of a rich valuation compared to its historical average. And once again, that deceleration when it comes to Red Hat, which obviously was a very big expense for this company, and it took a fairly long time in order for it to integrate here, decelerating a tad bit. I just think this is a buy the rumor, sell the news type of reaction here for the street.
Okay, all right. Let's talk a little bit about the price action in crude oil. Crude oil moving higher this morning, up 5% at the moment. West Texas Intermediate above $61 a barrel. This coming after the Trump administration slapping those sanctions on big major Russian oil companies. What's your take here? What should we notice about this?
Yeah, I think it's a multiple amount of factors that are actually taking place for this crude run to the upside. We were hitting close to a key area of support around this $57, $56 level. That's one. We probably had a significant amount of short positioning from managed money traders that are out there, so you probably are seeing a short covering squeeze taking place. We had the U.S. also impose some sanctions on Russia when it comes to the oil space. This is the first time the White House has leveraged that. So the market is obviously keying off of that. Maybe we do see a little bit of tightening and when it comes to supply on the global front, which is obviously pushing prices higher. This probably needs to be followed through, though, Diane, with India actually reducing its imports of Russian oil. We'll see if that actually does happen. There's official numbers that hit the street when it comes to India, and then we have these tracking apps where we can actually track these dark fleets or these shadow fleets, if you will. And if that is going to be the case, then maybe we do see maybe a pull on supply from West resources, especially here in the United States, which is also pushing prices higher. I would be cautiously optimistic here, at least for now. We're getting close to that 50-day moving average for WTI, West Texas Intermediate crude. But just be mindful, though, anytime that we have seen these bumps in price action here, we have also seen OPEC coming out and increasing their production quotas as well, which has been bearish on the market. So decent little run, but I think it's multiple factors that are actually leading to this 5% price advance that we've seen overnight.
Great point to watch out for OPEC's next move on this front. All right, let's get your levels for the S&P 500 today. What's your target to the upside and downside, KG?
Yeah, to the upside, you're seeing flows at 67.60. To the downside, 66.40. It does appear that we want to try to test the downside here once again. Let's see if some buyers really try to step in here, Diane, and try to move us higher. We do have the VIX sitting at around 19, so we're implying around a 1.2% move either to the upside or downside here. So heavy trading yesterday when you're looking at the volume. Let's see if we have a defensive posture here today, and if so, maybe we come back, hit some key areas of support before trying to move higher.
All right. Thank you, KG. That is Kevin Green, our senior markets correspondent. Appreciate that.